you and I have a long relationship with many sort of places where it's intertwined, and Kevin as well.
Well, shouldn't we
Uh,
welcome Dan?
yeah,
Explain.
welcome. Yeah,
Welcome
yeah,
Dan to
that's
the
exactly what I
show.
was going to say.
Nice.
Welcome.
To be here.
Yeah, yeah. I don't know how you snuck your way onto the show, but you're here now. You typically would we would only invite people who are currently running a company, which is venture backed. Your my understanding, Dan, is that you ran Managed by Q. Of course, it's known that you sold it to WeWork, and that it, I believe, later was sold again. And we can get into what the details of that are. And now you run a one of those venture capital funds that is weirdly named because in back in the day you could just name venture capital funds anything you wanted and it would turn out totally fine.
No
Uh,
problem.
that was in 2023. I'm not sure if that's the case anymore. And that's Gutter Capital, if I understand correctly.
Nice for that. Are you
And
making fun of his name of his VC
no,
funds?
no, we have a relationship, I feel, where we can talk about things in an open way.
Oh,
And he named it like that on purpose. And so welcome to the show. Thanks for coming.
My pleasure. Nice to see you both. Yeah. I haven't seen either of your faces, I think, in a long time. So
Yeah.
nice to reconnect. We've both got all
Mhm.
got long history. So pleasure to be here.
yeah, it's great to have you, Dan. And the reason that we wanted to have him on, it was just because we both know Dan, and we kind of, I think, all three of us went through like the Uber of era, and and have some, and this show is all about like helping like first time founders, mostly with some of our experience. So let's try not to go into the VC side of the world. Try to forget
Mhm.
all the VC-isms that you've learned. But yeah, that is kind of why we wanted to bring you on. You went through probably a ton of experience with Managed by Q. I remember, like, I don't know, Julian, if you want to kind of give the synopsis on the era that we all went through or
Yeah.
not.
I mean, I'll give my perspective on the New York era of which was the era of Uber of. This was the New York version of that. And often Breather was considered a New York company, even though it wasn't, right? It had a big New York office. And so what you had is like 5 or 6 laundry startups that were 1 hour laundry companies. And you had Breather, which was the only really kind of on-demandy office space, but there were many other co-working spaces, like I want to say 10 of them that all came out kind of chasing WeWork money. And you had, I felt like every month or something, or every couple months, there was a new Uber competitor that was launching in New York that had raised $100 million and right at launch. And so it was just the wildest of wild times. And Dan and I shared a common investor, which is, are we at the seed or series A? Dan, I gave my little perspective. I was only in New York part of the time at that during that era. What happened as far as you're concerned?
Yeah. I mean, I think you got it mostly right. I think it was sort of an era where there was a lot of optimism. I think it was a speech or a talk that Travis gave at the web about sort of the using bits to move atoms. And I think it
Yes.
really spurred a lot of enthusiasm and excitement and, rightfully or wrongfully in sort of the potential of software. And sort of, it was the advent of, everyone having the internet in their hand, and really like unlocking sort of a new era of logistics. I think, people suspended disbelief about, the unit economics of those businesses and maybe, didn't pay enough attention to sort of like how traditional models and the economics of them and the exit multiples of those businesses actually functioned. And I think, it's been what, 10, 15 years since then. And, the world has come back down to earth for a number of reasons, but yeah, I think you captured it pretty well, Julian.
It,
And of those, so the ones that I remember, so we had, so Managed by Q was an office cleaning service, and there was also a home cleaning service. What was the name of that company again?
Handy.
A YC company. Handy. Are they
And
still around?
yeah,
yeah,
I think
Enjoy.
I think in defense of managed by Q, like one of the things that we had going for us that was a little bit, more advantageous was this wasn't like an on-demand situation. You had, a
Totally.
recurring schedule. And
Totally.
part of the insight was cleaning was the wedge into a broader set of services. So it was like a full marketplace for commercial services. So cleaning, maintenance,
Right.
IT, security, staffing. And the idea was that cleaning alone was not going to be a very interesting business, but it would be a wedge into
A
other
wedge into
categories.
everything.
Mm-hmm.
Yeah. But I think the commonality between all of these businesses was really like the moving the bits and atoms coming together. And that doesn't necessarily mean to me mean on demand. I think most companies, including myself at Shyp, we moved away from the on demand model
Mm-hmm.
to a more scheduled. But it really was like real estate had their what is cleaning companies, storage companies. There was Omni.
Sure.
There
Clutter.
was
Clutter.
Clutter.
Yeah, Clutter is more like peer-to-peer. There was the green one. What was the green one, Dan? There was a whole bunch of them.
Make space.
There we go. Yeah, make space.
Makespace.
Mm-hmm.
And I think the only and then the ones that survived are Uber and DoorDash and the food delivery companies. Are those the only two categories that
Well,
really survived?
Andy got bought by Angie, and now it's part of, it's sort of like part of IAC's like home services play. And I think Ocean was CEO there for a while. I think Makespace still exists. I think,
But truly, what it means to being successful, I mean like having like venture like outcomes.
yeah, independent, sure.
Yeah, yeah.
Mm-hmm.
So those were, which is kind of what, and we talk a lot about it on the show. Like there's hype cycles that always happen, and that when the hype cycles, there's just hundreds and probably now thousands of companies that get created. Everybody's so excited, and then what happens that the outcomes typically there's going to be maybe like 5 to maybe 10 different winners in these categories. And so for like the entrepreneur, you have like all of your
Mm-hmm.
eggs in that basket. And so, but for the venture capitalist, they have a portfolio of these companies. So it makes more sense for them to be investing in these hype cycle spaces. But the risk from an entrepreneur, and this is why I never would start another company that's in the hype cycle. So for me, getting into like generative AI, I would consider the hype cycle right now is just like would be crazy. But as a VC, it makes a lot of sense.
I think also like just thinking about that moment in time, you sort of had a similar thing to what I've seen with crypto and Web3 and now with generative AI, where there's a little bit of this sort of like seductive technologist navel gazing that happens where like, just because you can doesn't mean you should, and yet people do. And so, with Uber, it was like they put a car on a map, and that was like mind blowing. And so if you think about early Shyp, Breather, managed by Q, there was sort of this impulse to leverage sort of newly available technologies to do a thing that was just, it was impressive and kind of novel. But, I think I think we all landed at a place of, is that actually solving a problem for the customer? And I think,
is it 10 times better?
a lot of people, died on that hill in the on-demand craze, but I think the exact same thing is happening now with crypto and Web3. I think it's likely to happen with generative AI because, anytime technology is in search of a problem versus starting from first principles with a problem and applying technology smartly to solve it, it doesn't usually end well.
Yeah, that actually reminds me of our last guest. So we had Laura from Shippo, and she was talking about, so she's been at another company. It's a shipping API, and she's been in it for almost 10 years. And she was like kind of jealous of seeing like the valuations of like people that have been around for 1 or 2 years. But like what she's been focused on is like just like solving customer problems. And you don't get a lot of the limelight. But those, if you look back, those are the businesses that typically are like the big, like it takes 10 years to build a really like great business. But it's hard for an entrepreneur as you look and see these rounds and I was part of this as well. Shyp, like we raised so much money in like a couple of years. And it was all based on all hype. But it is tough for entrepreneurs to the ones that are just grinding day in, day out. It's hard, but I think that's the right way to do it.
Yeah. And I think also like, I think the grass is always greener. I think when you're in a business that long and the business is fundamentally working, you're solving a real problem for the customer, you have a creative unit economics, you're not reliant on the hype cycle. There is
Yeah.
just a calm and a tranquility and sort of like just a zen to operating that's like so
Mm.
different than the frenetic like venture. I mean, all of us went through it to the extreme.
Yeah.
And I think all of us were good at it, to a point. But that's like, I think the biggest learning I have from that is like, it's just like no way to live. And if you get out, it's by the skin of your teeth. And it's just like, I would say the biggest thing that I, uh, emphasize now to founders that I work with is like, just because you can raise at this valuation and someone will do it, just like it
Mm.
wasn't true, if there isn't like an
Yeah.
integrity to the model, you're just on borrowed time. And
Yep.
especially given sort of the volatility of the market now, like that's just not, it's just not a smart bet.
I'm hoping to be able to have a conversation about the M&A process,
Sure.
and
Yeah.
because you did something that a part of me wishes I did, which is get to know the people that we work better. And it sounded like it kind of happened organically with all y'all. And then fundamentally, Managed by Q sold it to WeWork. And I want to hear it from you. I know parts of the story, but I'd be really curious about. I mean, first of all, this was an era where lots of companies were trying to be sold either deliberately or aggressively pursued by the founder Adam Newman, right? And so one way or another, lots of deals were happening, and he was ready to start a $1 trillion company. And there was a meaningful fallout. Keep in mind, I haven't watched the shows, so I don't know what
Oh,
Jared
come on,
Leto. No, I'm
Julian.
serious. I really
You
didn't. I
need
don't
to
know.
watch the shows. Dan,
No,
have you watched the
I,
shows?
I can't. Did you watch it, Dan?
Yeah. I did. And it was, too close to home.
Yeah,
It was the
yeah.
best of all of them. The We Crashed was the best of all of
I maybe
the
one day, but you're not. You will tell me in the story if it turns out you're mentioned in the show. But the I what is first of all, was that on purpose? Is that an outcome that you wanted? I I did you initially think, I'm going to build a $10 billion business or something? Like how did your thoughts change throughout the process, and how did this go down tactically?
Yeah. So I think, nobody starts a company thinking that they want to get acquired. But there are some outcomes that are better than others. And I think, as we continue to go down the venture path and raise at higher valuations and sort of, every time you raise at a higher valuation, you set the bar much higher of what a good outcome is. And by doing that, you are narrowing the universe, fundamentally of who is a good fit acquirer. And I think we got to a point where there was a pretty short list of candidates. And I think one of the things that we did well, and part of it was sort of like by accident. I met Miguel on a trip that Scott Harrison put together with Charity Water. So Miguel and I
Mhm.
met, in the back of a Land Rover in Ethiopia and spent like a bunch of
for the
time.
audience. Who is Miguel?
Miguel, sorry, is one of the co-founders of WeWork, Miguel McKelvey.
He's like the number two.
So we got to know each other on a personal level. And, he suggested that I meet with Adam, and I had heard all kinds of stories, and it wasn't really high on my list at the time, but eventually, went in and spent some time with him. I think I had the experience that everyone has, which is like, he, is kind of a wild man, but also he has some real visionary juice and like had a real vision for what they were building and had a real logical narrative for where we fit in. And that was 2+ years, maybe 3 years before the acquisition actually happened. But I think to your question, Julian, around sort of M&A generally, it is my belief, having been through it, that, unless you were throwing off tons of cash, or you have some like truly novel technology,
Mhm.
companies are bought, they're not sold. And if you
Okay.
are an entrepreneur and you think that M&A might be a path that makes sense for you. And even if you don't, honestly, it's like a good insurance policy. It's sort of your job as a CEO to think about, what is the universe of potential acquirers, and to build a relationship and understand like, how is my company the answer to their question? And something that
Right.
I tell the founders that we work with now, like, there will come a board meeting when a question is asked about the strategic lane that you play in. And if your name and your company is not the first words out of everyone's mouth around the table, you haven't done your job. And so it's like, you just really need to be proactive about,
Mhm.
you just don't know how things are going to unfold. And, optionality is key because demand is key to driving price in any situation.
So you are so good. You're one of these founders. Sometimes people say to me, they're like, "Oh, Julian has like a mystique." And I am the person that looks up at the pyramid and I think of Dan Teran as being extremely good mystique,
Wow.
like leagues above my mystique.
I haven't
Yeah, yeah,
read.
yeah. Yeah, leagues above my mystique. And I acknowledge that I have it, but you have way more. And
Oh,
and so first of all, there is this element of mystique, but there's also this element of relationship. Looking back at it now, I wish I had developed those relationships. I was very independent. That I wouldn't is that a mistake? It's certainly a path to be very independent, but I wish that I had the relationships. And looking back at it now, I wish that at every financing, I had said, let's do the financing, but let's also talk to acquirers at the same time. And that way,
really? You think so?
just to explore the deal possibilities, right?
Ugh.
So that you're looking at it, you're saying, here's the financing that's happening. And we're also talking to these people and we want to understand what the landscape of deal possibilities is.
Well, I think
And
that that's
go
also
ahead.
important, Julian, because
Yeah.
M&A is incredibly idiosyncratic. A deal happens at a moment in time. And so
Mm,
I think like, Kevin, seeing your reaction to what a waste of time that sounds like, you just
Yeah.
don't know when that question is asked at the board meeting and everyone is going to be hot to trot to way overpay for an asset that they weren't even thinking about 6 months ago. And in 6 months from then, they would have moved on. And so it's just like, do you or don't you want to get the call and be in a position to make a choice?
True. But yeah, my reaction would just be to basically be shopping yourself at the same time that you're fundraising. I think Dan, what you've done is like, I mean, when you were talking to WeWork, like it was over many years, so
Yeah, yeah.
it was a
Good is a good forcing function because, basically
right.
everyone knows that as soon as that deal is done, the price goes up. And so it's
mhm.
like, it's a good occasion to re-engage people. But I agree that like that was something that happened sort of in the normal course of business. And it's also like, it's not that much time if you're like, I'm going to meet one strategic, forever.
Right. Mhm. And so tactically speaking, what happens during the deal process? Are there any moments that all of a sudden it feels like that something is not going to happen or something is definitely going to happen that you remember? What were the sort of like important points at which things changed in terms of being possible or not possible?
Well, with our deal in particular, like it unfolded over the course of years. An offer was made a year before we signed a term sheet and it was insultingly low. And it was like, at the time, felt like a colossal waste of time and energy. I think like part of me knew that, walking away from the table offended was, a negotiating tactic. And like a year later, the price was double. But that was definitely a time when it was clear it wasn't going to happen. And then, a year later, that set the expectation that I wasn't going to go through that process again. And so I think everyone on their side, there were people that just wanted the deal done, but also there's people that like genuinely care about their reputation and are good people and like didn't want to waste my time, my management's time. So that set an
Right.
expectation on price.
Mhm.
And then, yeah, I guess it was like February or so of 2019 that I think like, especially with an acquirer, like WeWork and honestly for any business that's not being valued on fundamentals, you can be having like great conversations and be miles away on price. Because, there's a lot of intangibles being valued. Um,
Mhm.
and so until there's like material agreement on headline terms, and usually that's in a term sheet, like you just don't know. I think forcing the conversation on sort of the headline terms early is a good way to avoid wasting cycles. Cause I've talked
Right.
to a lot of founders that get months down the path and then realize they're miles away on price.
Yeah,
Yeah. Yeah.
that's my question. So for the very first time you got the first offer, how much of that, how much time did it take for you and also any of your team to get that? You actually got a term sheet with the price?
Yeah. or maybe they just wrote it on a whiteboard and then I stormed out. I don't really remember, but, um,
Just imagine Adam Newman writing some number, I was about to say a number, on the whiteboard in big lettering, circling it, and then saying something crazy.
yeah. And imagine me walking out, and going straight to the airport. I think it was in San Francisco. Yeah, I mean, it was a lot of time. I think at that point, I kind of had some intuition that like it was the right investment in time to be making, even if it wasn't going to reach a deal at that point. I mean, you have to also go back, like they were insanely capitalized and they also had like insane scale in the category. And like, it was, you know, my view was we were going to have some relationship, because it's a small world.
They were so big, right?
Yeah. And like, increasingly, I mean, Julian, you will remember this, like there was a moment in time where like in New York City, every, startup, and any like even beyond startups was either in a WeWork space or was using Q in their office. Like that was like, probably 80-90% of the market. So, yeah, it was, it felt like a good investment in time. But it was a lot of time. But again, as a late stage company with the company like functioning and operating, like I'm not sure higher leverage use of CEO time than even if it feels like you're getting the runaround, which I was.
Right. So as an early stage company, so call it Series A, when you're still actually doing a lot of the operating, like you taking whatever 40 to 60 hours is probably not a good use of time.
No, I mean, unless you are conscious that what you're actually aiming for is a strategic partnership and investment, like, educating them on your business. Like, but if it's only a success if a deal happens at that stage, then like probably you're wasting time.
It's interesting because I remember at the time, I feel like that at some point there was like WeWork went to put money in a round. This was just somebody on their BD team. It was never actually like the relationship with the founders at all, which I never had. And I remember being like, this gives you access to all of our numbers, and this feels like highly suspect or something. And I declined it. And I'm wondering whether or not you would suggest that one of your, portfolio companies that you have at Gutter would actually do something like this, or whether it's actually a bad idea.
No, I think you made the right call there because like, what are you getting? Like a little bit of capital. You're not even dealing. The other piece of advice I would give to anyone is M&A happens principal to principal. If you are except in cases, it's like, it's all based on relationship. If you are like in my view, there's like the type of M&A that like the CEO says we're doing this and everyone backs off for the rationale and the numbers. And then there's the type of M&A that, the corp dev team does, which like there's a strategic plan and there's like targets you go after, and those ones often don't have very exciting prices unless it's like, a mega.
I was going to say that. Yeah.
So yeah, I mean, I think you made the right decision. I don't think you don't want to be giving too much away. You want them to ring on it.
It just brings up so much for me because, in New York at this time, and even sometimes these days, you get in, maybe Silicon Valley has similar things, Kevin. I was just in New York last week and I spent some time with Sam Korkos and he had like a dinner of founders, right?
Yep.
And so in thinking about this, a thing like this, I was like, is this time valuable, or is it something where you look at it and you say, I'm not going to waste my time going to an event and just like doing this kind of like shitty networking that ultimately has no value. And that's really kind of the question that I have is like, does this networking have value, or is it something that I should skip? Because you specifically talk about Miguel and meeting him in like fucking like, pardon me, like Ecuador or whatever.
Ethiopia, close. Yeah, I mean, I think you have to think about what value it does have. So there's two things like, Julian, I actually was invited to that dinner. And if I'd known you were in town, I could have moved some things around. But I think that kind of, so those relationships, like part of it's therapy, having like close founder
Yeah.
relationships that are going through the same shit as you.
Yep.
Yep.
And for me, that was like the Casper founders, the Bark founders, like, there's and you included, Julian, like that has immense value for the mental health of a founder because there's just nobody else that's going through it. Like Colin Powell, famous leadership principle, command is lonely. The only people that understand it are those that are in command of their own things. And so I think that's really helpful. The other thing is you'll get signal from those people on the market that only they can see. And so I do think that can be, they might tip you off to a strategic acquirer. They might, give you good intel on an investor that you think is interested, but like they know why they're actually never going to do the deal, but they're not going to do that until they waste your time. So that type of stuff I think is valuable. But it's obviously really dependent.
Sorry, I got to follow up with this because there's these events which is like I'm going to a dinner, which kind of have like not that much time to waste, for example. And then the next level of these, which I'm sure to some degree, Kevin, you've received, and everyone, he had dinner with Leonardo DiCaprio, so we know he's received them. It's in this next level of like, oh yeah, we're going to rent an island and Richard Branson will be there. And so will, and I want to say this with respect, douchebag A, douchebag B, douchebag C, and douchebag D. And you're kind of looking at it and you're saying, and so like, Summit Series is a bad example. I've actually been to it. So I guess I am douchebag A, right? It's me. I am douchebag A. And so like, it sounds as if what I'm hearing is that is how these relationships happen, because from principal to principal, that's the easiest way to get to the principal, so to speak. Is that what you're saying? Or is this too idiosyncratic to kind of like make a general statement about?
I mean, I generally wouldn't be getting on an airplane to attend, therapy session or something. So maybe, so maybe that's extreme, but yeah, I do think also these dinners can be big time wasters. I think where the most meaningful relationships that I've had are like intimate relationships that like you get to know people and they let their guard down, tell you all the fucked up stuff in their business. You do the same. And then you're like on a different level. And I think Julian, we got there over, many years of operating sort of adjacent and like, so if you're the type of person that's going to go to a dinner and like meet one or two people and those are going to be like, lifelong fruitful relationships, then great. But if you're going to go there and like have a couple drinks and be on your phone and then leave, then it's probably like you could stay at the office.
So I think it all comes down.
So you are recommending the douchebag dinners in Ecuador, or you're not? Just to be clear.
No air travel involved, I would say.
Got it. That's the rule. Okay.
I think it also depends on a lot of different things. I think it depends on your life stage. I think on also like your network, right? If you have zero network, you should be doing everything you can do to create a network at all. So that may include some flight travel, or going to some. Actually, I met a really good contact to this day at one of those Summit Series events. So I don't think that it's always time, but like for all of us here, that those things are a waste of time. Because we already have really great networks, but for some of the earlier on, I think some of those dinners can be helpful. I've created a lot of my network around, other portfolio companies. And so we have a common VC, that's been helpful. And just like getting together with them. Some of the dinners, I think that you need to be intentional. Like, if you get invited, I'll say the name, because I think that they're supposed to be dinner like next week, an SVB dinner. If you get invited to a founder's SVB dinner, if you're intentional on like trying to make some relationships and you follow up with people, then that's okay. But if you don't follow up with them, then it's just a waste of your time. And unless you just wanted to have a free dinner and have some drinks, and I think we've talked about this before about building networks. It's really a lot about the follow through and
so
it takes time.
Yeah.
And so I think it just depends on where you are on like your network, and what types of things that you should go and attend. And some things can also be for fun. Like I know the lobby conference is something that a lot of people go to. I don't go to that. anymore. But I went there and I've had fun. And there's a lot of founders. I don't think I
Hmm.
got much out of it, but it was a fun thing to do. And that was before I was married and had kids.
Right.
And so it made sense. So I think it depends on just kind of your life and career stages as well.
And I will say, like, just speaking personally, like, as a, I think, more introverted person who has about an hour or two of extroverted energy per day to
Got
spend,
it.
right? And so if you are such a person and you happen to be listening to this, you can find those places where it's strategically valuable. And then probably, but I'm actually like, I'm being facetious, but I'm also serious. It also helps to develop the mystique that we just talked about, if it is possible to develop such mystique. And the reason is because it draws people to you. And so then you've got your outward energy, which is like, I'm going to this dinner and I'm going to follow up really well. And you kind of treat it a little bit like a CRM to a degree.
Yeah.
And then you have the internal mystique, which is like, you're invited to podcasts, or you shoot your mouth off on the internet in some other way to draw people to you, which means that you don't have to be as extroverted as you would be otherwise. Dan, what do you think with this?
I mean, I think Kevin made a good point about stage of life also. Like we were all gentlemen, at least in our 30s. And at the time that, I started Managed by Q, I was 24.
Mm.
For most of the time was single, had like, no commitments in life other than building a business, sometimes to my own detriment. And it was like, I left it all in the field. Like every waking moment, of every day was about building that business. And so I went to everything.
Hmm.
And I feel like on this go around, I kind of got that out of my system and like, I want to have more of a life. And I'm better at prioritizing my time. So I, I do think, in terms of like the audience, for younger founders without commitments, like that's a competitive advantage. You should, definitely
Yes.
doing things. But if you're at a different stage in life, you got to prioritize. And yeah, I mean, yeah, I think Julian also, the thing about those events, it's sort of like a layer within it. If you are introverted, I remember like you and I were wallflowers at a million events together. And I was like drawn to you, gauges in your ears, and you look like people I went to hardcore shows with growing up. So I feel like
Right.
you find your tribe.
Mystique, baby. Uh, and so it now, looking at the portfolio companies that you have, you're still talking to entrepreneurs all the time. Do you see maybe like a common thread in the type of people who are able to? I noticed in New York at the time, we had so many companies that were kind of like follow-on companies that had seen some element of hype or something that was like trendy that I could think of so many companies like this. I'm not even sure, like maybe like in the real estate space, there were just so many. And you were looking at it and you were saying, is this really going to exist? The principles at the time were, these aren't software companies and I wouldn't find myself investing in them, for example. Right. But then I would find myself proven to be like a fucking idiot because the next round they would have some kind of crazy valuation and I would be like, am I dumb? Like which, and so how do you figure out what reality is at any given time, and how to sort of align yourself with it and make sure you're not like askew with some crazy hype cycle a second time? How do you know when you're in it or not in it?
Yeah. I mean, I think like one thing that I have a partner that I invest with, James Gettinger, who's an incredible thought partner and he is the least given man to the hype cycle you'll ever meet in your life. And is like truly someone that thinks from first principles, and kind of from the ground up, no matter what it is, whether it's like, looking through SVB's loan book or, thinking about crypto or generative AI, like comes to a fundamental view. And I think like that is critical to anyone doing anything in life. There are so many people that spend their entire life just floating on the surface of what everyone else is saying and what everyone else is
Mhm.
thinking and don't actually understand the ground truth about anything. And I think as an investor, one of the things that, I'm grateful to have a little bit of like time to think and do differently is like
Mm.
really coming up with a fundamental view on everything that we do. We invest from a like very long-term, thesis driven approach, from a problem space. We're looking at the biggest problems facing the United States. So affordability of healthcare, education, and housing, economic mobility, and climate change. If you believe in sort of the Warren Buffett, never bet against the United States, then you believe that we absolutely have to solve all three of those in our lifetime or we are fucked. Right. Like that's a fundamental belief. And then when it comes to like the actual businesses, business models are inescapable. And I think at Managed by Q, well, I didn't really know much about business when we started out. We kind of iterated through every business model in the book until we found a good one, and burned a lot of capital doing it. And I think, just thinking through business models from first principles and sort of the inescapable gravity of the model, that combined with like investing in real problems and things that we think will take a decade to solve, I think cuts away a lot of the noise. And I think like the biggest failure mode is, when you combine technologist navel gazing with speculators enthusiasm, which is like what happened with a lot of crypto and Web3. It's happening now with generative AI. It's technologists that are really, really excited about the technology and speculators that don't understand it.
Yep.
That's a good combination of lenses, because if you just have the speculators, they'll speculate about existing things. But if you combine that with a set of people that just as a group that have occasionally created $100 billion businesses, even like 1 out of 1 million times, as you're describing what's going on, it kind of makes me realize like every little while you'll get a Mark Andreessen and he'll just say some shit. And it'll be like software eats the world. And then everyone will just take that, and you'll have a bunch of people with capital that will push that in a certain direction, and it'll lose the underlying connection to the financial model, as you're saying, at which point everyone will say, but I guess the conclusion is like, this time it's different or something, which it sounds like never is, especially since we're in the middle of this Silicon Valley Bank thing. Things just happen in cycles, I suppose.
Yeah. And I think like but to my previous point, over the long arc of time, like you just can't escape like the reality of the business model. It either generates cash flow long-term or it doesn't.
Yep. That's right. I'd love to ask you, Dan, why you chose, after selling Managed by Q and you were at WeWork for a period after, why you decided to go the VC route instead of starting another company.
Honestly, if you had asked me, 2 years ago, 3 years ago, if I'd be doing this, I would have said like categorically, no, it was not, something that I planned on. Basically what happened was, we sold to WeWork. 6 months later, the company failed to go public twice. I was overseeing corporate development and ventures, which was Meetup, Conductor, Flatiron School, all the non-core businesses. Over the course of a weekend, it became clear that they needed to divest themselves of everything I was overseeing.
Right.
And consequently, it made sense to divest themselves of me as well. And so I found myself, and the thing that I think is interesting is all of that happened before anyone had heard the word COVID. It was like literally a month before,
Wow, that is weird.
So I found myself unemployed for the first time since I was 14, and stuck in my apartment, and I had made, a number of angel investments, including, in both of your companies, with my partner, James. And I had time on my hands, and like, I'm a builder by nature, and like, I like being helpful. So I started reaching out to some of the founders, particularly people who were in New York, particularly like mission driven founders that didn't have great networks in tech, didn't have like the pedigreed team where I felt like I could help move the needle. And I got a couple reps in of sort of doing kind of early stage founder coaching combined with recruiting some of my best people. Like the happy accident of WeWork's implosion was, every single person that I had hired over the course of 5 years, either left or was fired. And so they were available. And so if you look at companies in our portfolio, like Opus and Bicky, both of those companies, I helped to recruit in 2 co-founders that had worked for me for, 4+ years and are just like excellent operators. We know how to work together. And so it was sort of this beautiful synthesis of helping mission-driven founders achieve their goals, helping my people reach the next level in their career, and then being able to be sort of involved in a capacity that made sense for me at the time because I wasn't really trying to jump back into operating. I didn't really want to manage anyone after, many years. Uh, so basically did that for a year and a half. And then what we realized was, it was working. The companies were inflecting and we were introducing them to our friends who had seed funds and they were taking all the economics and, that didn't make a lot of sense for us either. So then we went out to raise the first fund. And honestly, like, it's funny when you said in the beginning, like, we don't have venture capitals on the way I feel that I'm building like 13 companies at the same time with people that I love working with and taking like big shots on goal at big problems. And it's a blast. So it doesn't, I'm certainly not like, kicking back, playing the ponies. That's like, feels very full on operational, doing a lot of the same things I'd be doing as a CEO.
Is being in New York useful? I guess the meta question I want to ask is it useful to be in a big city? Is New York at the time, keep in mind, this was when New York was really happening I was going to say for Silicon Valley, for tech is what I mean. Like Datadog had not yet gone public maybe, but was a really big thing. The Trade Desk, which I think is a New York company that Jerry invested in. Those were companies that are out in New York that were becoming really meaningful. And so you had your first set of tech companies that were quote unquote real. And it started to look like it was a real ecosystem. Has it developed? Did it implode? Yeah. Yeah. Tell me.
Yeah. I mean, listen, New York has been, everyone was just like dying to shit on New York at the beginning of the pandemic. And it has been the biggest beneficiary because, where do people want to be? Like they want to be in fucking New York City. If you can work from anywhere, turns out like you don't move to like the woods, you move to New York City. And so I think like, it was sort of a very, self-interested point of view from a very small set of people in the venture world that like, people were going to move to tax havens, whatever, like young, talented people want to be in New York City. Like that has been true.
Or San Francisco.
Maybe that for most of New York. I mean, the amount of people that are moving from San Francisco to work remote for San Francisco companies from New York, it's like, it's honestly a little bit scary to me. Like the sheer volume of tech that's coming here now, it's very different than it used to be.
New York definitely is a much bigger tech focused city than it ever has been before.
Yeah, which makes me anxious. It was nice to be not the tech hub because when you go to dinner, people work in fashion or art or media or finance, and like it's just interesting and vibrant, and it keeps you hungry because nobody gives a shit about your tech company. That's maybe changing, but I mean, New York remains pretty lit on the tech front. I think like we've got a nice thing going here. We have an office on Canal Street where we've got 7 companies in the portfolio that are represented there. So they're either based there or they're based in places like Portland, Maine, or really anywhere. And their New York contingents work with us. And so there's a nice little built-in community. It's a lot of people across the companies that work together, managed by Q. So people know each other, support each other. It's super fun. It's actually the office is the original BarkBox office, which was the pre-hype office, which was
cool.
My office when I started Managed by Q, and they were the first Managed by Q customer. So I'm literally sitting at the same desk I was at 10 years ago.
I'd love to ask, in the spirit of like the commonalities between the three of us, if we can share some knowledge of like what it was like to run like and kind of a people business, but also a tech company. If we have any learnings or stories or anything to share, given like today that these types of companies just are not getting funded. What are some stories you guys got?
Dan had 400 people, I think something, and like 350 of them were cleaners, if I remember correctly. So you go first.
Well, we had like 1,000 at the peak. And then the model evolved to a managed marketplace. So then we worked with a lot of like large established mom and pop facility companies. So towards the end, we didn't have all of the service providers as part of the company, but Yeah, I mean, it's like, it's wonderful for a lot of reasons, because you're interfacing with, a much more diverse cast of characters. And I don't mean, just their complexion, but also just like the points of view, the lived experience. And,
Right.
that was a real draw for people to work on products and engineering and design at Managed by Q, because you
Mhm.
were dealing with people that, had a totally different perspective. And I think we had a pride around building tools for people that, swung a hammer or a mop for a living. We did something that to this day, is one of the things I'm most proud of, is we gave, equity to, hundreds of cleaners and handymen. And when we sold,
Cool.
um, uh, a number of them made life-changing wealth. Like, that was, really amazing. And
Very
our
cool.
employees got all cash on the sale. Um, but it was also really challenging, because when you have 1,000 people in other people's offices overnight, and these people make, low wages, and like they do all kinds of stupid shit. And like, and it's like, yeah, I mean, and it's, that makes for some very challenging conversation with with your customers. But yeah, I mean, on the whole, it was a great experience. I think, it's really hard to manage culture when you have just very different, employee populations. But I think
Mhm.
one thing that we also did well was try to create pathways so that there was always a legible way to enter the company as a cleaner,
Yeah.
and end up like in one case, a software engineer, in other cases, in operations management. And like,
Mhm.
I think it's important to not, try your best to have legible pathways through the organization, so
Of
that it isn't
course.
like a two-class system, which I think it often ends up being.
Right. Yeah.
Julian, what do you got? We've heard about
Well,
all the drugs that people did in breathers. What
so
other
first of all,
stories do you
everyone
have?
is always asking me about this. And Dan, I don't know if you and I have ever talked about it, but I deliberately kept those stories away from me. But that said, I will tell you the following
Nice.
generalized anecdote. I was sitting at not Buvette. What's the name of that fucking French place that
Friendship.
God that on Prince? What is it called
Or
again? Yeah,
Balthazar.
yeah, yeah. And yeah, Balthazar. And I was sitting there with like some hotel operator one time, and I said, and I was trying to compare like when people rent rooms, like how gross is it really? And I was comparing. We probably had 100 something breather spaces at the time, so probably 25 cleaners in New York. At the time, we were the biggest Uber rush. It was when Uber was starting to send objects here and there in Manhattan. We were the biggest user of it for, I want to say, like a year or something.
Right.
And so I asked the dude, I said, "Hey, an average hotel, like how often does something gross happen?" And he said, "What, like average hotel 300 rooms?" I said, "Yeah, sure, 300 rooms." And he says, "I don't know, once a day?" And I'm like, "Once a day? Okay, so like what kind of gross are we talking about?" And he says, "Like a biohazard?" And I was like, "Okay, oh, okay, so we're doing better than that." And so that was comforting to me. But I think, it's I guess what I learned and what you learn, probably to a degree inside of cleaning in offices, right? Which is more strictly speaking what Dan did on that side, that it's like when people encounter, and especially anonymously encounter, like the physical world, and like anything crazy can happen. And it's just like I will say I'm honored by the people that worked at Breather and that worked as things like cleaners, and that would show up after some like rich tech dude had like blasted a room because he had done too much coke or something. I
No
not that I
way.
don't know that that type of thing happened, but it almost certainly did, right? And so if something like that would happen and somebody shows up
Right.
and they have to deal with it and they
Yeah.
call another cleaner because they can't do it alone.
Right.
And so now you've got three people trying to set up a room, and the next booking is in an hour.
Right.
Okay. So you have essentially these people of a certain status, let's call it either maybe with corporate credit cards or not, that are essentially like just demolishing your ability to try and create a business.
Yeah.
And so it was just a wild time where you could use that type of wild experimental business stuff to create a tech company that was valued at like a 50x revenues at the height of it, probably. right? And so that's never going to happen again.
No.
But it was awesome. It was
Yeah.
really, really awesome.
Awesome for you.
The business being super off the wall. Like now my business is so much more mainstream, mainstream and normal, 90%
Software.
margins. Like it's like, the idea of risk is we were saying the other day, oh, let's like subsidize all of someone's, transaction fees through Stripe because our customers hate paying that 3% transaction fee.
Right.
And I was like, let's just subsidize that. And the people over on the product side are like, oh my God, that's risky. I was like, you don't know risk. You don't know what
Right.
risk really looks like compared to people that dealt with atoms during that phase. So Kevin, I'm sure you have some similar sort of feeling. Go for it.
Yeah, we managed hundreds of employees. I think we had at the peak, it was like 300 employees across 5 different warehouses. And we had people in warehouses and also people picking up stuff at Shyp. And yeah, we'd get anything from like discrimination, like within like the warehouses, to people, doing extremely inappropriate things to customers. It just, everything you can name it, it is really hard. And the thought now that you could actually scale, like if you think of like a venture return, it's your revenue has to go exponential. It has to, right? Like
Yeah.
they get a true venture return. And that's what all of our investors thought. They all thought our businesses, and the thought that you can grow like an employee base like that exponentially is just, it just doesn't compute to me anymore. It's just like, you just can't do that. And yeah, there's just so many things that go wrong. And you're exactly, I completely agree with you, Julian. Like the risks that we now take on being a pure software and a marketplace business. We actually do have people on the other side of that, of our marketplace, but we don't deal with it. But it's just completely different. But I don't believe, Dan, going back to your business model piece, I don't believe that venture belongs in like scaling up tons of buildings or people or whatever. It's just, it gets to a point where you're just not able to manage quality, like, or like you just can't continue growing and getting people, or things just, so the service deteriorates. It's just a fucking mess. And I didn't deal with a lot of the hands-on. I know, Julian, you mentioned you're just like to your ops people, you're like, don't tell me what actually happens. I don't want to deal with it. I did have some things that happened, and we actually had to pay off some from customers from going public from some of the stuff that actually happened.
Like, just to be clear,
I can't say what it is.
I just want to say this specifically, and I will not get more detailed than this. There are prominent people who you probably have met or know about that have been permanently banned from breathers and that were and when they were banned, and we had to call them and give them an explanation, right, as to why they were banned. So it is really wild out there, but it's just that type of thing is simply not possible. One thing I'm curious about is Dan, do you believe that it is still possible for atoms to intersect with bits and to create a venture type outcome, specifically in real estate? Or do you believe that real estate is this weird exception? Because there are people on both sides. I'm really curious as to whether you believe a real estate business that specifically that touches the square feet, whether an outcome is possible or not.
Well, I mean, I think, depending on when you invested in WeWork, it was, it's still a public company. It's obviously gotten pretty beaten up, but I think I would push back a little bit that the types of businesses that we all started, like they all had their issues, to be sure. But I do think that you can achieve venture scale returns in a well-executed business that has, a logistical component or an operational component.
DoorDash, Uber. Yeah. Good examples. Airbnb
did that, but I do think it's still doable. I think your point, Kevin, is well taken, which is the pace of scaling of human systems is just different, forgetting the cost for a second, than the pace of scaling of software. And so that's a limiting factor. But I do think like there's different models, like, franchising being one that can make, more possible. So back to like the first principles thing, I really try hard to stay away from categorizations. Like these types of businesses will never be venture
That's
businesses.
true.
To be
That's
funded
great.
again.
That's good.
It really just depends on like the specific situation and like, how it's capitalized. I think on real estate, like there's just so much in flux right now with the built world. I think the most interesting thing is, I'm doing like a lot of research on, office to apartment conversions. I think just given sort of like the regulatory nature and the capital intensivity of the actual like retrofits, it's hard to see a venture business sort of on the but there are also like opco propco models that can work. So I don't know. It's hard to generalize.
It is. It is hard, and there obviously are exceptions. I think, like the marketplace, like it's actually amazing to see the execution of a company like DoorDash. Like, like they still get all of the issues when things are not delivered or there was somebody rude that answered a door or something. They all get that to their customer service team.
Speaking specifically to DoorDash,
Yeah,
it is known from the get-go, YC took this company on, right? And by the way, when it was probably not controversial, but when it was like maybe to a certain degree contrarian to do so, in the sense that the category was considered to be done, kind of, especially in lots of cities like New York, where Rumba had like totally taken a dominant position. It was difficult to get any wedge in. But the DoorDash founders were unusually strong on their numbers. They understood their numbers the way that and my memory of the best company that understands their numbers from Silicon Valley that made a thing that was with not a lot of room for additional cost work is Wish. Like Wish to me is the company where they're like, holy fuck, how is it possible that they scaled this thing when they're selling things essentially straight out of a warehouse in China kind of thing, and with almost no margin on top of the object. So like DoorDash the founders had that level of, I want to say, sophistication on the numbers side. And that is really different from how I knew my business. I definitely did not know my business to that degree. And Kevin, I don't know, but I'm going to argue that you didn't either. And most on-demand founders didn't at all.
Yeah, I definitely not to the degree of DoorDash. I did not. I was more focused on the actual product and the product experience. And then for us, it was just, we just didn't have the frequency of use. That's why we didn't ultimately make it. And so, but it is amazing what like the DoorDash founders have been able to accomplish and how much they're valued at right now too. Like
Dan, in short, it sounds like you're not ready to make sort of a categorical case of software can't eat the world somewhere. You still believe that it's kind of possible wherever it happens.
I think it really depends on the model. And also like, there's just like different structures that can accomplish, a venture scale return for the piece of the business. And that can be done through franchises. It can be done through edge marketplace. It can be done through an opco propco model. So there's different capital structures that I think can allow a thing, the software driven, fundamentally scalable thing to be distinct from the aspects that just like software can't move any faster.
Yeah, that's true.
That's great. Dan, awesome. Thanks for taking the time to chat
Thanks
with us.
for taking the time. Yeah. And thanks everybody for listening.
All right, guys.
Bye-bye.
Bye.
We keep it real and we bring you the facts. It's the Second Time Founders podcast. Talking tech news, the show is a must. Not some billionaire trying to sell you their book. We coming from a real place, plenty ups and downs. Got some insights, join the discussion now. We being honest and raw, giving you real talk. We've been at the bottom and made it happen and much more. The Second Time Founders podcast. More building, less talk.